beginning of a secular inflationary move in global markets that'll be tied to commodities. Commodities were not a big factor for 40 years. It was financialization, interest rates, extend and pretend, just create more bonds, lower, the coupon rate, extend the maturity. That's the way the world worked for 40 years. Now we're in a new world where suddenly the price of stuff like energy and food, it cannot be hidden anymore. It's actually hitting people's bottom line, and that's not going to change anytime soon. That's a secular shift in the inflation in the economy, in the globe, that's going to be with us for years, not a few months. And so that's something that is new for Bitcoin. And ultimately, it's going to do well in that environment because as people begin to understand that the financialized world is crumbling, having a, I often say Bitcoin is a risk off investment. It's not a risk on, it's a risk off. This is where you put your safe haven cash. It's hard to make that case with the volatility the way it is, but when you have something for all the other reasons, it's unconfiscatable, uncensorable, immutable, it makes sense. And it makes a lot of sense for 1 billion or 2 billion people out there that have been unbanked. That's where the growth's going to come. That's where the adoption's happening. So those are the changes, some differences, some similarities.
When you think of the macro environment, the Fed says they're going to continue to raise interest rates. They're going to conduct quantitative tightening. They're going to get a soft landing. Inflation will come down. Everyone calm down, and all will be good in the world. How crazy are they, and how off are they in their thought process that they can actually get inflation down and not push us into a recession?
It's as I said, I think this is a kind of a follow-up to what we were just saying there. So the Fed is still thinking like the world is similar to the way it's been for 40 years. Starting with Greenspan, you had the so-called Greenspan put. Every time markets came down, Greenspan would flood the market with more cash or lower interest rates. And that went through Bernanke, Janet Yellen, Jay Powell, the activist Fed. The model has been with us for 40 years, and that there's no problem that can't be solved by money printing. What happened in February 24th with Russia-Ukraine now is that model is dead, and the price determining factor for prices is shifted from the New York Fed or from the Fed to the East. To Russia, China, Iran, India, Central America, South America, Brazil. Those countries are going to be determining prices going forward. And so the Fed can only operate if the world is on a globalized US dollar standard. But that's no longer the case. On February 26th, 2 days after Russia-Ukraine conflict, the Fed seized like 600 billion, I think, or billion in Russian reserves. So, China looked at that and said, you mean our reserves aren't safe? So that was a huge, self-own, that was one of the stupidest things that anyone could have done. So now we're in a new world. And I just think Jay Powell and these guys and Janet Yellen, they haven't adjusted yet. But, markets are cruel, and the market price ultimately works its way into reality. And that gas price isn't going down. We're talking 10, 11, 12, $15 a gallon for gas in the United States. And that do the math, Pomp. That's not going to